Today, the bank of mum and dad goes through the roof. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. I've updated the Bank of Mum and Dad statistics for the latest quarter. That, of course, is the amount of money that first-time buyers are able to leverage out of their parents to assist in the purchase of property across Australia. Very important statistics because it really tells us quite a lot about what's going on across the market. So today I want to walk you through those latest statistics, but also talk about some of the underlying issues that this represents. It's worth saying, I think, that this information is updated quarterly, and in fact it was presented on terrestrial TV yesterday, so it's very recent. First point to make, though, about this particular analysis is that it looks at not guarantees, but actually real money being handed across from parents to kids. And it's quite a sport at the moment. In fact, the amount on average being handed across has never been higher. The first point to make, though, is that the first-time buyer loans, according to the ABS, did ease back in September. And we are seeing that also in our own statistics with regard to the Bank of Mum and Dad. But of course, first-time buyers are still much more in the market than they have been over recent times. The previous peak, of course, was 2009. And we are seeing a lot of interest from first-time buyers because there's a great fear of missing out at the moment. Prices are running away from them. The lending standards may well be tightening. And first-time buyers are also quite keen to avoid having to incur the lender's mortgage insurance premiums. In fact, I discussed lender's mortgage insurance recently on a separate show. I'll put the link up for that. It's important to understand the trade-off of getting a 20% deposit, perhaps with help from the Bank of Mum and Dad, compared with a smaller deposit and then paying for lender's mortgage insurance. Now, as well as the trends in terms of volume, and by the way, it's worth noting that there was a pretty consistent pattern across most of the states that the first-time buyer momentum is easing. Of course, the stimulus measures have also been reduced and house prices are accelerating away, making it much less affordable. And of course, there is also a limited number of people who are in the first-time buyer mode at the moment. They've been pulled forward thanks to government incentives and a bunch of other things. So in fact, the pool of first-time buyers is somewhat diminishing. Now let's look at my data then when it comes to the number of Bank of Mum and Dad loans. They actually fell in the September quarter. And the first way of looking at this is by the number of transactions. The transaction count dropped to just over 20,000 over the last quarter. And that represents around 58.8% of transactions in the quarter had some support from the Bank of Mum and Dad. Now, that wasn't always necessarily in terms of a cash deposit or a cash loan. It could have been other supports or indeed a guarantee. But nevertheless, a lot of people are entering the market thanks to their parents and being able to leverage from them. So there were 21,693 Bank of Mum and Dad loans. The peak was close to 30,000 a few months ago, so it has eased back. But you can still see the momentum is a lot stronger than it was in the period between July 2019 and March 2020. The next thing we can look at is the average loan. Now, this is just looking at those where money changed hands from parents to their kids to be able to go buy property. And the average amount that's outstanding now is $94,784. That's as high as it's ever been. It did reach an earlier peak just below 90,000 back in 2017, eased back, and now it's accelerating away. So $95,000 is the average amount that the Bank of Mum and Dad is lending to their kids to help them buy a property. Now, it does vary across the states. It does vary by individual transactions. Not everybody's getting 95,000, but that also means that there are some households who are buying with the help of Bank of Mum and Dad and are getting $250,000 to $300,000, massive amount. Now, it's very interesting to ask the question then, well, where does that money come from? And the answer is that money is actually coming from the parents, quite often leveraging the equity in their own property. They feel more affluent because of the fact that prices have risen. And so they're able to pull money out. In some cases, they are actually remortgaging to be able to pass the money down. In other cases, they already have those savings available, thanks perhaps to stock market performance, which has also been quite strong recently as well. But it is interesting to understand that there is an intergenerational shift of wealth going on here, that parents are passing money down the generation to their kids to help them to get into the market. And of course, the expectation is that those people who hold property will gain wealth later, just as they did a generation or two ago. Be an interesting question to visit this in a few years' time to see whether in fact that is what happens. Third piece of information to look at here is where the Bank of Mum and Dad sits amongst the other lenders across Australia. They are within the top 10, actually number 9, based on the latest data that we've got. CBA and Westpac, National Australia Bank and ANZ, of course, are the big 4. And then you've got Macquarie and some of the regional banks. But the Bank of Mum and Dad sits between Suncorp Metway and the Bank of Queensland. And there's about $37.7 billion sitting with the Bank of Mum and Dad at the moment. And it's worth reflecting, of course, that the Bank of Mum and Dad is not reported in any of the official statistics. And so many of the regulators are missing the critical issue that this intergenerational wealth shift is a fundamental dynamic within the market and is absolutely making prices higher, thanks to the fact that the Bank of Mum and Dad allows people to borrow more and to extend their reach, which of course drives property prices higher as well. Now, let's stand back and just think about this from two perspectives. In terms of the kids, does it make sense? Well, if you're able to get into the market and avoid lender's mortgage insurance, which is a large premium, it may well make some sense. Of course, the question becomes, if there are multiple kids, do they all get the same support from their parents? Well, that's obviously a very important question. The other question to note, though, is whether this is actually a formal or informal arrangement. In our surveys, we still see a lot of informal arrangements, and it's not always clear as to whether the money is a loan or whether it's a gift, on what basis the money is made, and whether interest is going to be charged. I always recommend a structured agreement be put in place so it's clear as to whether it's a loan or a gift, what the interest rate is if there is, and what the repayment strategy may be. And it's also worth thinking through the question, what happens if, for example, the relationships break up, either at the parent level or at the kid level. Now, from the point of view of the mum and dad, it may seem a free kick insofar that there's so much equity growth in property at the moment that it's relatively easy to pull money out. Mortgage rates are really low, so if you have to remortgage, it's not really a problem, and you can pass the money down. But of course, the question we'll have to ask about that is momentum in the property market likely to continue? Well, it probably will to an extent, but APRA's announcement yesterday suggests a tightening. The Bank of New Zealand's move to lift the cash rate is a signal that rates will go higher later. So my own view is that momentum in prices ahead will be a lot lower than it's been. Whether it goes negative will be, I think, driven more by some of the geopolitical issues, and particularly what happens with the US and with quantitative easing. But the fact of the matter is that the Bank of Mum and Dad is alive and well, and it is absolutely critical in terms of understanding the way the property market is going. But it is not without risks, and I always recommend, one, that if you are going to enter into this agreement, that you document it and make it clear so everybody understands the basis on which the transaction is happening. Second, that parents are clear what it's going to do to their finances later. And here's a third point, and a very important point. My data shows that there's a 3 times greater probability of people who've got help from the Bank of Mum and Dad subsequently defaulting on their mortgage relative to those who've had to save for longer periods. The problem is that if you get a seagull gift, then you haven't had the discipline of saving and scrimping and putting money aside over a period of time to buy a property. So sometimes it could be seen as being a bit too easy. So there's a 3 times greater probability of a Bank of Mum and Dad facilitated transaction ultimately leading to default, not immediately, but over the subsequent 5 years. So in conclusion, the Bank of Mum and Dad is alive and well, and it's important to understand its dynamics in the market. Also important to understand both the risks and the benefits of going down this route. And I'll update the data again in December to see what happens ahead. I wouldn't be surprised to see the total amount from the Bank of Mum and Dad continue to grow and the average funds passed across, either by a loan or a gift, continuing to rise. Because ultimately that's a function of rising prices and people's appetite to get into the market. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.